Moving on to the story of today, how bad is this correction in small caps? Very hot subject, no questions about that. Every time the market goes up, there is a lot of chatter around small caps, the best small cap fund to invest in, small cap multi-bagger stocks. Because of course, we are greedy as humans. We want money. We want to make quick money. We want those stunning performances across our portfolio. We don't want steady gains for a long term, from a long term perspective. So this primarily greed that basically drives, across these segments that show traction, right? I mean, if you see, a lot of people came into the small cap space, especially around this point. We recently even covered in one of the stories how there has been a lot of fund flows into the small cap space and also the sectoral and the thematic segments as well. So it is a very recurring theme wherever there is traction, wherever there is chatter. That is where a lot of money flows, and people end up going through this correction. People who don't understand how the cycles work, how the market cycles work, end up going through this correction, and finally they square off their investments and move out of the markets to never come again. So as of now, small cap index 100 index is what we've taken for study today. So this 100 index, because small cap 250 does not have enough data, that is why we're taking 100. It is currently at a 22% drawdown from this level, so 19,800 odd levels was the previous all-time high. From there, we also saw the death cross. Maybe we'll do an episode on the impact of death cross in the future, but hit the death cross around the early part of Feb. And in Feb, as of now, the first half of the Feb, we are down about almost 9 to 10% yet again. So second consecutive 10% loss on a monthly basis. So this Jan also saw, Jan period also saw a 10% fall. So in Feb, also the first half, we are seeing a 10% fall. Overall, there has been a 22% correction. Though in today's episode, we are going to study something interesting. So this is a confidence boosting episode. You can consider that. So what we're doing is we are seeing how this current fall ranks when you compare it with all the historic 1 month returns in the past. So there would be many instances where the small cap 100 index would have corrected 15%, 20%, 10%. So this current fall is currently at about this monthly, on a monthly basis, on a 3 month basis, 6 month basis. We are trying to rank all the worst ever performances from the lowest to highest. And most importantly, the objective we are trying to convey through this episode is that the phase that comes after this correction, the 3 months, 6 months, 1 year, 2 year, 3 years, so the phase that follows a very bad sort of a monthly or a quarterly or a half yearly phase in the markets is usually positive. And we are trying to drive the fact that markets don't stay stagnated for a very long period of time, and you just have to pass through this time with some patience. So let's go through that right away. So this is the 1 month historic study. Jan 2025, there was a 9.9% fall. Feb, we've only reached the first half of Feb, so we've already seen a 10% fall in Feb. Let's go through the data now. So this is the 1 month historic data. So from 2004 Jan onwards, we've had 253 months so far, and we've ranked this from the worst to best month. So the worst month, however, was October 2008. The structure of this analysis is that we track the performance, the worst ever performance, what has been the 3 month return after registering this worst performance, and then what is the 6 month returns, what is the 1 year return, right? So even during an instance like this, where the small cap 100 index corrected or dropped 37%, the 6 month return following that period was positive. So it is not that there was continuation of that correction. It is not that the markets completely went into a mode of correction for a very long period of time. Of course, there can be a correction, no questions about that. But if you can stay patient, there is light at the end of the tunnel. Is what we are trying to convey here. So 1 year returns after this phase, exceptional at about 76% gain. So very similar data here. March 2020, the 1 month return was 36 minus 36.6%. Of course, COVID recovery was very, very sharp. Let's not try to focus too much on that. 28% returns 3 month basis, 6 month basis 62%, 1 year return 126%. So of course, there were specific pockets where there was a more structural sort of a fall. For example, the global financial crisis, wherein the correction continued for a few more months before stabilizing. Right? So it had a dull phase even 1 year after the correction as well. But overall, if you see, this is the average of where does the current fall stand? Let's look at that ranking before we get into further analysis. So this is Jan 2025, 9.9% correction. 22nd, and it is the 22nd worst performance from a monthly standpoint since Jan 2004, right? And Feb currently, when Feb has not ended, I don't want to take this as the returns for Feb. So Feb, as of now, stands at about 21st worst performance out of 253 months. So that is where it stands. And if you see the 1 year return on an average basis, 24% is the 1 year return we've registered. We've managed to see across all those months wherein the 1 month return was more than the 1 month return, the loss on the monthly basis was more than 10%. So it is very, very healthy, 24%. And on a 6 month basis, it is at about 11%. So very clear data suggesting that once you try to get through this phase of correction, you definitely have some positive outcome going forward. So it is just a phase that you have to withstand and get through. On a 3 month basis, as you can see from Jan 2025, the current 3 month phase, starting from Jan, we are currently at minus 18.8% loss. This is still mid February. We still have 1.5 months to go. We are just halfway through there. Let's quickly take a look at the analysis from here. So let's go to the 3 month data. So I'm really sorry. Yeah. Yes. So on a 3 month basis, we've had about 84 months, 84 quarterly phases since Jan 2004. So the current fall, basically, which is 18.8%, ranks fifth in terms of the worst performing quarters. And if you see the previous quarter, October 2024 ranks 30th out of 84 total phases. So again, the average performance, if you see, I've calculated all the averages of uh, the worst performing months above this mark. What we can see here is 6 months after such a bad quarterly phase, we've had 27% average gains. Just one instance where 6 month performance has been in negative, and one instance where the one year performance has been a negative. But apart from that, it's been exceptional. 12-month gains at very healthy 107%, 126%, 28%. So average basis 51% gains is what we've seen after going through a correction of more after going through a fall of more than 18% on a quarterly basis. Quickly going through the next data, 6 month basis, of course. This data will show 18.6 only. I mean 18.8, 18.6 recorded at different time intervals. Quickly going through this performance on a 6 month basis, though, here there were about 42 periods. Out of 42 periods, this ranks at eighth in term. 8 out of 42 is the ranking in terms of worst 6 month phases, and the average performance recorded above this phase. So from here, from rank number 1 to 7, above this is about 48%. 1 year later, the performance after this kind of a dull outing in the half yearly return, that 48%, and 2 years later it has been 61%. So there is absolutely no reason to complain. Only one instance where we've recorded negative performance, that too in Jan 2018, when the small caps went through a structural correction. And if you see the 1 year performance also, it is very, very healthy. And on a 1 year basis, this is the data I want you to focus on. So 33% of the times we've had negative performance. So 1 out of 3 times is where we've had negative performance. So it kind of continues with the logic that we say, where you go 2 steps forward and come 1 step backward. So this current year already is at, I'm sorry, the ranking is a bit messed up. So this is the fourth worst ranked year across all the other years that we have. And on an average basis, 1 year later, the performance has been 44% on an average, 72% 2 year later, on a 2 year basis after this kind of a poor year. And 3 years after a negative outing on a yearly basis, we've had 71% gains as well. So very, very healthy numbers coming out from this. Clearly indicates that one has to be quite optimistic. When you can't sort of get into a level where you just want to keep going up. So that is the big problem we have in the markets. We all want this, right? So we all want to go from this point to this point of the markets. But what the market does is that 2 steps forward, 1 step backward is the clear logic that the market gives out, right? So you cannot have this without going through this. A lot of people end up coming around this phase, and then they exit around this phase, going through this pain, and then they never come back again. But there is light at the end of the tunnel. Without this red bar, you are never going to get the green step. Without the red step, you are never going to get the green step. इसके बिना ये बिल्कुल नहीं मिलने वाला. So that is the hard statement that I want to convey on this episode. So you have to be aware of all these metrics. So these metrics, are given so that you understand from a statistical standpoint, from a historic data standpoint, whether there is relief after this kind of a phase or not. So we are nowhere near. We are not in a very difficult situation at all in the markets. There's no question about it. So also another important point is that it is not what is the job description of the market. So markets' job description is primarily not to punch in at 9:15 a.m. sharp every day, ensure that the day ends in green, make every investor rich. So this is not the job of the market. So markets his job is not to do any of these things, right? So market is very smart. So market, what will do is it will put money into the pockets of those investors who know how to sort of get the most of the market. So how basically people who are willing to play the long waiting game, people who are willing to make learn from the mistakes and not repeat them in the future. So market has its own way of rewarding people. So you have to ensure that it is very unfair to expect the markets to continue going forward. You should understand that this too shall pass without any questions. And in fact, this is the kind of spectacular rally we've had. So this is the support I've marked, and this is the resistance also I've marked here. If you see here, it's been phenomenal. We've only broken below this mark once, that too during the COVID time, but the response also was fantastic. And after this kind of a rally, if you cannot withstand this correction, I mean, I don't know how it will be possible for you to also reap the reward when the markets go up. So please continue investing in the markets. That is the quick takeaway from today's episode. Ensure that you don't pull out during a correction. I hope you've taken all this data, the standpoint that from a 6 month, 12-month basis, markets have always recovered in the past. I'm not saying that that is exactly going to repeat in the future as well. There is historical evidence that difficult phases don't last for long. Continue your SIPs, don't pull out, especially during this point in time in the markets, and also ensure that you don't discontinue your SIPs as well. So a lot of people fear a correction and they decide to pull out the money, you know, fearing that the money invested is further going to go through a loss in the market. So please don't have that perspective. Please continue to invest and also let us know your thoughts. See, we've been very fortunate at Weekend Investing to have a community, to have a set of investors who have seen multiple corrections, right? So there's a very interesting shift in dynamics in how investors have been behaving compared to the 2021-22 correction and the current sort of blips that we've seen this year or the past year. So we've not seen people becoming anxious. We, in fact, a lot of investors have, continued their SIPs. We've seen people coming and investing or subscribing to new products whenever there's been a correction. We've seen multiple such emails where people have completely shown faith in the market. So it is good that with some data points that we've been sharing, and also all the other sources on internet, wherein which are helpful in giving you that right perspective and mindset to remain invested in the long term. So please let us know in the comments below how many corrections you have you seen before, and what's been your experience with each of these corrections. Every other person also will benefit from this, and also let us know how you liked today's episode in terms of the data that has been shared. So thank you so much for joining in. I will see you in the next episode. Thank you so much. Bye bye.